What's up, everybody? How y'all doing? Welcome to another Black Diamond FX trading session. All right, so today we go take a little detour, all right? And we will be discussing options because lately I've been doing pretty good with options, all right? So, and I just want to show y'all the process that I use, the strategy that I use to find my options trades, okay? So I want to show y'all this one right here. The first thing I'll do, all right, this is triple Q, also known as Invesco. All right, so the first thing I do is I go to the 4-hour chart. And on that 4-hour chart, I look for market structure. So in those of you that don't know what market structure is, let me show you right quick. Okay, so let me turn off this right quick and I can't turn you off. Actually, what I'm gonna do is this. All right, so check this out. The market moves in 3 different directions. All right, so it goes up, making higher highs and higher lows. All right, hold up. It goes down, making lower highs and lower lows. And the market also moves like this, sideways. All right. We call this consolidation. All right. So that's the first thing I look at. What direction is the market moving? Is it going up, making higher highs and higher lows? Is it going down? Oh, wait, hold on. What happened? Wait, I don't know what happened just now. Trying to get it back. All right. Is it going down, making lower lows and lower highs, or are we in consolidation? Now, normally, normally I would only trade an uptrending market or a downtrending market. And depending on the time frame, you can trade a consolidating market, depending on the time frame. If the time frame is big enough, then yes, because there's a lot of room. All right. So I just wanted to show you guys that's basic market structure. That's the bare bottom basics of market structure. Okay. So let's turn you back on. All right. So like I said, the 4-hour chart. So as you can see, we're coming down, right? We're making lower lows, lower highs, lower lows, high, lower low, lower high, lower high. Now this one here kind of beat it a little bit, but I mean, still, it's still on the downtrend. All right. And even right here, even if we look at this part right here, this section, we have a peak high, and we make a low, lower high, another low, lower high, another low, lower high, low, and so on and so forth. Okay, so that's what I did. So when the market is trending down, we look for sell opportunities. When the market is trending up, we look for buy opportunities, right? So that's what I look for. I also look to see if there are any areas where I may be able to take a trade from. And I also look for what's called liquidity. Now, areas, I trade supply and demand. So that's what I look for, supply and demand areas. I saw this right here, this area up here with this long candle right here. You see when you have this candle and this little short wick, the area in between that is called inefficiency. Some people call it imbalance, a gap, a fair value gap, or whatever. But it's very far away. All right. Now we can get into more specifics in my course, in my lifetime Black Diamond FX day trading program. All right. But we're not going to get into specifics of it right now. We're just going to cover the basics. All right. So that's what I found. So immediately, all right, I see downtrend, right? We're looking for sales. Then I go down to the 15-minute chart. All right. Now the 15-minute chart, that's where I start looking for other areas, okay, where I may be able to take a trade from, areas of liquidity. And as you can see, these green areas here, these are my liquidity areas. All right. Now liquidity, that's where a lot of money resides in areas of liquidity. That's where stop losses are, pending orders are being made right there. As you can see here, a lot of sales are being made coming from this zone, this area right here. A lot of buys are coming from this one. So if we look at this one, we know we're taking buys from here, right? Now, A lot of traders look at this as support and resistance. I look at it as liquidity. Why? If you can't spot liquidity, it's because you are the liquidity. Okay. Now, don't get me wrong. You can be successful trading like this. Personally, I don't. I don't trade support and resistance. It's just a preference of mine. You know, I know people that do very well trading like this. Very, very well. All right. And also this was a little demand zone right here. This a little demand zone here. Came, retested, took it up, took out this liquidity right here up to this zone, which I think it may come back to it. All right. Will it come back to it tomorrow? I don't think so. I think it's going to continue to drop from right here. All right. But that's what I look at. I found this zone right here. And as you can see, inefficiency. Now you see this gap right here. This gap is important. You can make a lot of money on these gaps, but you got to know how to trade them. Right. And like I tell my students all the time, when you see candles coming down and then there's a gap and it continue like this gap can be assumed a down candle. All right. Same thing on the upside. When you have a candle here and then a gap, and then a candle up here, you can assume this is an up or a bear, or bull candle. All right. So that's what I did here. I saw we had a zone here, inefficiency. I counted all this as inefficiency. So I knew that it was going to come back, right? So I just waited. I marked out, I saw we had liquidity here, right? And I knew it was going to take that liquidity. Actually, I think I went to a lower time frame, the 5 minute. Okay, and you see equal highs. Equal highs are a great indication of where liquidity is. All right. Now, remember what I was telling you about gaps? The gaps will be filled. See how this gap was created? Look, now watch this. I'm gonna draw and I'm using arrow for right now. I want to show you exactly where I filled at, right over here. Take my magnet off. Right over here, boom. Gap filled. Once that gap gets filled, look what happened. Boom, it dropped. All right. Look at this little small gap right here. See this little gap? And look what happened. Gap filled right there. Y'all see that? Boom. All right. Now, man, what happened? Hold on 1 second. All right. Now I'm looking at this gap over here because this gap is going to get filled. Will this fill it? Maybe, maybe not, but the gap will get filled. I want to see how this responds tomorrow to this little area right here. Let's see. Hold on 1 second. Where is my rectangle? All right. I want to see how this responds tomorrow to this area right here. Right up in there. All right. Right there. I want to see what happens. Because what I'm thinking is, let's move this. Because I want to show y'all something as well. All right. So remember we found the liquidity over here with the equal highs. Well, look, we have the same thing here, but on a smaller scale. See right here? Equal highs from here all the way to over here. All right. And I can mark that liquidity. All right. So that was a target. And there's a zone right here. So I'm thinking that it's going to go up here, especially with market structure going down. This will hit this zone and then price will continue to go in the downward direction. But in a nutshell, that's pretty much how I find my trades. Number one, go to the 4 hour and look for market structure all the way back from here. August 16th, been coming down. All right. It even beat this low right here. Wait, let me see. Let me take my drawings off right quick. I need to see something. All right. So this low, let me put on my horizontal ray. This is going to be a bit more accurate. All right. It barely beat it. This probably can be considered equal lows. So there's liquidity sitting below there. We can say there's liquidity sitting below this low and this low because they're equal lows, right? Now, retail probably will be expecting this to go up and start buying because you see we have double bottoms. All right. But let's take a look. Let's take another look. I think it's going to may drop a little bit lower. If we look way back here, See, we got a little zone back here. Let me see. I just want to see how this look. Where does it reach? Let me see right quick, y'all. Take a look. All right. Okay. So we already got 50% mitigation. Oh man. Hold on 1 second. Turn this on. I gotta change this to this. All right. Make this a little bigger. All right. So we got close to 50% mitigation here and price started coming up. So it's possible that this is going to come up. Okay. And it could come up back up to here. Because as you can see, this is on the 4-hour chart. This is a zone right here. And we have, see this gap in between here? What I just called it. Who remembers? What is it called? Inefficiency? Yep. Right there. Inefficiency or imbalance. So it's going to come up, probably balance the market. So I'm wondering if I could possibly take actually all this is imbalance from here all the way to down here, all the way to down there. So all that is imbalance. So I'm looking at perhaps taking a call option. All right, now when you take a call option, for those of you that don't know, a call option is when you want price to go up. All right, and a put option is when you want price to go down. All right. Okay, so let's go to the 1 hour. All right, remember I say we had liquidity here. We have imbalance all up in here, from here all the way up to there, we got imbalance. All right, so it's possible. And look, there's liquidity sitting right above here, this zone as well. Okay, so I'm gonna delete this. I think price could possibly go up to 79.79. If I go to Robinhood, I started this account about a week ago with $50. Yeah, with $50, just to kind of see, because I'm fairly new. Like I know how to trade. I trade options the same way I trade forex. It's not hard at all. But since I'm new to it, I'm still trying to understand a lot of the terminology. I only put $50 in it now. I'm at like 204. So I'm just going to grow it, take my time and grow it, see how much I can grow it. All right. So I'm looking for triple Q, Invesco, right there. I just want to see what a call option would actually look like. I want to see the strike prices as well. Okay, that's tomorrow's expiration. I usually go for weekly expirations. Let's see, 273. And I want to get to 279. Right now it's at 272.06. Damn, there's no 272.50. Wait, what's this right here? This strike price is 273. Break even, implied volatility, 60%. All right. So I like the implied volatility on it. All right. So this price, at this strike price, at this 273 strike price right here. All right. For one contract, I would pay $2.27 a share, which would be $227 for 100 shares of triple Q. And if you click on it here, it'll show you 273 call, expires today, buy. All right. Max profit unlimited, max loss 227, break even at 275. So it'd have to get to 275.27 to break even, and anything above that is extra. And I wanted to get to 279. So that would be real nice. That would be real nice. The only thing I'm questioning now is because this would be a counter trend trade, not a pro trend. And counter trend is going against structure, like market structure is coming down. So we would look for sell. So I'd have to do a call option. That means I'd have to go up, buy up instead of buy down. And that's going against. And I don't know if I'm so willing to do that. Now I am expecting a pullback on this. Let me see something right quick. If I go from, I know what I'm gonna do. Let me use my magical fibs from here to here. All right. So when you want price to come up and then drop, you want it to come somewhere in between. Oh, let me get rid of this one. Let me get rid of this bottom one. All right. So you want price to come, when you want it to come up and then drop, you want it to come somewhere in between 50% and up here and 100%. All right. And you want to sell at a premium. You want to sell at a premium. And this definitely falls within the premium zone. All right. And on the flip side, if I was looking for, well, I'm gonna say this, since I'm looking for a call option from down here, this actually, let me change this. Let me see something right quick. Let me see what this looks like. 22. All right. So it says up here. I think it's gonna come all the way back up here. So that's not it. That's not what I was looking for. All right. So when you want price to go up, when hold on, I'm trying to get my words. All right. So when price is coming down and you're looking for a pullback, you want to see where it goes to. All right. And you pull out your fibs. All right. So I got 0, 50, and 100. All right. All the way back up, that's 100% pullback. This 50. You want it to pull back between somewhere between 50 and 100%. Now this green, I use this for forex trading because a lot of times it'll pull back somewhere into this, and I like to look for areas to enter my trade somewhere up in here. But since we're talking about options, I guess the same thing can be applied, but I just don't look at it that seriously because options trading is a bit safer than forex trading. You know, with forex trading, I got like a whole week to get to my for expiration or whatever expiration I decide. With forex, it's like, especially with options, like the way I trade options, see, I have max loss 227. That's my max loss. Max profit is unlimited. I make sure that when I trade options, this is on buy and not sell. Because watch this. I want to show y'all something. See how, wait, let's go back. All right, so it says max profit unlimited, max loss 227. Watch this. Watch when I switch to sell. Same thing, sell. And I want to sell let's say I want to sell. All right, look at this. It's reverse, max profit, $273. All right. Max loss, unlimited. Expected profit and loss, $179. All right. That's my expected profit, $179 on a sell call on triple Q. All right. I mean, and to me, it just don't make sense. Maybe to some people it do, but especially with me being a fairly new options trader, it just don't make sense. All right. And I'm gonna tell you that this works. I got in, this was today actually, 8:30. And my account was valued at 136 at 8:30 this morning. It got up to 220. I actually saw like 230, somewhere around here. And it just came down some, 204. All right. And these are the two trades that I'm in. Ford, this is Ford. Ford expires next week. All right. And I am up, as you can see, 115% on Ford. I was up as high as 143% at one point. All right. And my other one is GoPro. All right. This GoPro, 60%, 20%. All right. And this one expires tomorrow. So let's look at GoPro over here. Let's see. I think it's up here. GoPro. Yeah, that's it. I think I deleted my setup on this one. But GoPro looked like it may be doing a little pullback as well. And if we look at this one on a 4 hour, pretty much the same. See, the only thing, I think this may start to go up some for a pullback. Let me see something. I go from here to here. All right, I can see the pullback coming to about here. All right, and then look, if we come down here, you see what I look at on the 4 hour. See, we got this candle here. Then we got this big old area of inefficiency. All right, and remember the inefficiency, the gap in between the candle before and the candle after. Right, and look what happened. It came, filled it, started going back up. So GoPro, I might do I might look at a call option on GoPro up to about maybe at $4.99, $5. If I do a $5, let me see, all options. If I buy a call at $5, I got to get to 506. All right. So 555, that would be that'd be a nice profit. And look, I can do a call for $12 a contract. I might just do that. I might pull the trigger on that one because this one expires. You know what? This expires tomorrow. So here's what I'm going to do. I got these 2 GoPro contracts. I'm about to close them out. Sell to close. Review order. Submit. All right. Done. All right. So hold on 1 second. Let me see. Let me see. Investing. Pending orders. Okay, 2 sales to close. Okay, that's it. Sale to close. Now, I'm gonna go back to GoPro. And I want to put in a trade GoPro options. And I'm showing y'all this is how you trade on what this is. Robinhood. This is how you trade options on Robinhood. Max loss $9. I'm gonna do 2 contracts on this one as well. Let's see, continue. Give me 2. Good for the day, $18. Review order. Hold on, let me see something. All right. So expected you profit and loss. So currently here, this is my strike price at $5. I want it to go up. All right. And then I start making money. 511, 512, 506 is my break even, right? I mean, 509 is my break even. So if I can get it to about, this 518, just as high as possible. Matter of fact, but this is for tomorrow. 506 tomorrow. This is for tomorrow's expiry on GoPro. You know what? And I got to get to 506 up here. Let me see something. 506. Right around there. Tomorrow's Friday. I think I may try 1 contract. You know what? Let's see what next week looks like. October 7th. All right, 16 cents. So that will be times 100. That'll be what? $160. Like 514. Break even. Decide. $9. I'm gonna go with 1 contract. Yeah, I don't like losing money. I don't. Who does? All right. So we're gonna stick with that 1. We're gonna stick with that 1 and see what it looks like. All right, review order is only $9. Submit. Let's see if it even fills. It might not fill. But we'll see. All right. But that's how I trade. That's how I trade options. All right. 4 hour GoPro, looking at GoPro. Move drawings. 4 hour coming down. Right. Okay. I see my zone right here. This right here, the reason why I did a call instead of a put is because of this right here. This is what I see. And I'm wondering, look like this kind of broke market structure right here and created what's called a change of character. Oh, this came down, filled this right here. All right, came down, look where it tapped it right up in there. Okay, filled this. I think that's gonna start going. Let's look at the 15-minute. See that right there? Might come down a little bit lower. You know what? I'm gonna play it, and then tomorrow is Friday too. I think I'm gonna play it safe and drop this. I'm gonna end both of these. Cancel order. I'm gonna cancel both of these orders. And this one. Cancel order. All right. And starting Monday, I'll just come back fresh. All right. I'm gonna do what it do. Come back fresh on Monday. All right, maybe I should have canceled this. No, we'll see. But yeah, that's pretty much my technique for trading options. I keep it simple. I like to keep it simple. There's so many different strategies to trade options that is crazy. It is crazy. All right. And this is the forward one that I'm in right here. And this is where I caught it right here. Same thing. 4 hour, staying in line with the trend. And even though it was coming up, look what happened. Boom. I said, you know what? It's going to drop from right there. And that's what I did. I just took it. Boom. And the market opened here and dropped all the way down. See that? It opened. It opened with me in the money. I opened in the money, in profit, like almost immediately. This was amazing. Right here, and then boom. All right, and the triple Q. I think I deleted the triple Q setup. No, I didn't. So I'll be looking at triple Q to probably come down. Either from this zone right here, or I may come up and fill this gap and then drop. We'll see. All right. But that's it, man. Look, if y'all want to learn to trade, I trade forex as well. Let's see some of my forex setups. AUD, USD. Still waiting for it to go up. Take out this liquidity, see what happened. AUD, JPY, same thing. I'm looking at this perhaps going up here and then dropping. All right. Do I have a euro set up on Euro USD? Euro USD. All right. It took out this liquidity here. All right. Still haven't taken this one out. I'm looking at it to possibly come back down, but that might not happen until next week because it's kind of far away. All right. GBP, JPY. This is one of my favorite pairs. I don't have a setup on it though. GBP, USD, no official setup on that. US 30. US 30 got me. US 30 got me this morning because I took this buy up from here, I took it here. I think I got in a bit too early and it stopped me out and then it went up. Because I was gonna buy it to the money, I was gonna buy it to the liquidity up here. And it ended up stopping me out, but it's all good. That's why we trade responsibly. And gold. Okay, gold is approaching. Okay, gold. So gold look like we may get. This was a setup I was looking at on gold. How I use liquidity to trade with supply and demand zones. All right. So number one, take out the buy side liquidity. This is the buy side liquidity here. Took it out right here. Okay. Number two, after taking out buy side liquidity, price then aim for sell side in line with structure. Okay, so this was my sell side liquidity, equal lows. And then look what happened. Boom, took it out. All right, number 3, on the way down, price created more liquidity while taking out previous pockets of liquidity. So as it was coming down and came down to here, what happened is it took this liquidity out, and then look what happened. It created more liquidity here. Okay, then once it created that, then look what we got. Created our zone here. This is our next zone that we're going to target when it comes down. All right, went up, created liquidity here, dropped. There was probably something up in here that I didn't see. And then look, we are taking this liquidity out. Now I'm expecting it to come up in here, and then somewhere inside this zone right here, where I can take a sell opportunity down to around 16, 18, somewhere down here. Yeah, perhaps somewhere down there. And then once I get here, now I got it going up, but I'm gonna delete this right quick because I don't know if it's gonna do that. We're gonna take it one step at a time. All right. I just wanted to show you guys that options, how I trade options, and how I use liquidity with supply and demand zones. All right. So y'all have a great day, and I'll talk to y'all later. Deuces.